Welcome. This is a presentation on Chapter 2's comprehensive problem. Chapter 2's comprehensive problem is at the very end of the chapter where we find all of them. These happen to be on, this one happens to be on page 136 and 137. And so you can open your textbook to page 136 and 7, and you can see the solution behind me. It's up here, and so as it says, it's for BA 250 worksheet for this comprehensive problem on page 136, and you are to enter all the transactions 1 through 17 into this worksheet and total the accounts at the bottom. So you'll notice that you have yellow boxes indicating where to put transactions 1 and 2, and then you have yellow for all of the totals at the bottom of the worksheet, but you need to enter all the transactions 1 through 17. I have left the account titles over for the retained earnings, whether it's revenues or expenses. I've left those in so you don't have to insert those. That'll be a ready reference for you about what the transaction looks like. So I'm going to point out here that we have the company name at the top. We have cash, accounts receivable, supplies, prepaid rent, and land. Those are all the assets. So those are the assets we're going to be using in this problem, and those are going to equal, and we have accounts payable and salaries payable. Those are the accounts that we're going to use, and the unearned revenues are the current assets. The notes payable are the long-term assets, and so I've got to look away from the camera. Excuse me just a minute. But the accounts payable, salaries payable, unearned revenues, notes payable are all the liabilities, and notes payable is the only long-term liability that you have there. Then you have common stock for the contributed capital, and you have retained earnings for the earned capital. So as we look at those two equity accounts, we don't have revenues and expenses broken out yet. They're still in the retained earnings. We'll be doing that in other times, other problems, and certainly in other chapters. So we have the assets equal the liabilities plus the stockholders' equity. Now, the first row that we have going across, we have the beginning balances. And so the beginning balances are given in the little box on page 136, and I left those in there for you so you don't have to add them in this time. But I have a note in the course outline reminding you when you're working on these problems to be sure you always put in the beginning balances, or that could be you'll be off by those beginning amounts, and it's very frustrating as to why won't this balance. So beginning balances are in there for you. You quite literally have to put in the transactions. So it says, I'm going to set my book up so I can read this. The trial balance of Palico Security Services, Inc. As of January 1, 2012, that would be the beginning balance on 2012. Were as follows, and they have cash, land, notes payable, common stock, and retained earnings. And those balances are entered for you already. During 2012, they experienced the following transaction. Acquired an additional $2,000 from the issue of common stock. So you are required to come over here on event 1, and under cash, put in 2,123 and put in $2,000. And then it was for the sale of common stock, so we want to go all the way over to common stock, and we want to put in 2,123 because then we have that line of the equation in balance, 2,000 in cash going up and 2,000 in common stock going up. So that's the entry that we have for the first transaction. For the second transaction, it says paid, so that means our cash is going down, $3,000 on the debt owed to the Small Business Government Agency. The loan is interest-free. So we have no interest on this loan, but we do have to put in $3,000 of cash going out. So we want to do on parentheses. I'm going to see, I think from last week I remembered that these didn't need the parentheses. Excuse me. It does need the parentheses, so as you put in the parentheses 3 comma and then 3 zeros and then the off parentheses, that will be the amount of cash going down. And now notes payable is also going down, so that's on parentheses 3 comma 1 2 3 off parentheses, and that's our way of recording that the cash was going down, that the note payable was going down, that we had paid some off. Now you're asked to enter all of these. So the next one says performed $21,000 of security services for local events throughout the year. $15,000 was the amount on account and $6,000 was for cash. So now over here for item 3 we have 6,000, 6 comma 1 2 3 zeros under cash, and we have 15 comma 1 2 3 under accounts receivable, but over under revenue we have the entire 21 comma 1 2 3 in the revenues, and so that is transaction 3. Transaction 3 revenues went up by 21,000. Cash went up by 6,000. Accounts receivable went up by 15,000. So then you continue on with these transactions. I think that the transactions for rented a building is pretty clear. You paid 12 months in advance, so that's prepaid rent, and you have prepaid rent there. You purchased supplies on account, so supplies went up by $650, but accounts payable did also. Paid salaries expense for the year, so you would have salaries expense going, making retained earnings come down, and you'd have salaries paid, so making cash come down. Incurred other operating expenses on account, $6,200. So $6,200 would be with brackets because they're operating expenses and they're making retained earnings come down. And then $6,200 was all on accounts payable. So we're obliged to pay this sometime in the future. On September 1, a customer paid $600 rent for services to be provided in the next 6 months. So on September 1 in 12, they paid $600. So $600 went up, and unearned revenues went up by $600. That's what would have happened on September 1st. You're going to have to come back and use that date later. Collected, number 9, collected $13,500 of accounts receivable during the year. So accounts receivable went down by $13,500, and the cash went up by $13,500 because they paid us those amounts. They paid us. We collected $13,500. But now in the item 10, it says paid $5,800. So now it's our cash going down by $5,800. So, and our accounts payable going down by $5,800. So both of those are negative amounts, making our transactions go down. Paid, so it's going to make our cash go down again, $1,500 of advertising expense for the year. So advertising expense goes down by $1,500, and cash goes down. It says for the year, so it would be for this year. Number 12, paid a cash dividend to the shareholders for $1,000. So $1,000 is going to go down. and retained earnings is going to go down by the $1,000 dividend. So both of those will be in brackets. Number 13, the market value of the land was determined to be $5,000 at December 31st. Well, that's good to know, but we do not change historical cost for land. So there's no entry for number 13. We just leave it blank. And the note at the bottom says no adjusting entry is required for the change in market value. Now, the additional information that will help with the adjusting entries are that there was $65 of supplies on hand at the end of the year. So remember, the formula in the chapter is beginning supplies plus supplies purchases minus the ending supplies to equal the amount of supplies expense that were used during the year. So I'm going to leave you to calculate that number. And then we have, or maybe I should point it out to you, supplies has no amount in it, so it's zero at the beginning, plus $650. So that equals supplies available $650 minus the $65 that are left in ending supplies, and the difference then is the amount of supplies that were used, and you would make supplies expense go up. So when supplies expense go up, retained earnings go down, so you're going to use a bracket around retained earnings and then a bracket around the amount in supplies to make that supplies go down by the amount we've used or consumed. Number 15 says recognize the rent expense. Now, here's a calculation for you to think about. We did prepaid rent over here in May 1. So on May 1, we rented a small office for 12 months. So, and it cost us $2,400. Now, if it's $2,400 for 12 months, it's $200 a month. So $200 a month. Now, then the question becomes, how many months did we use it? Well, we had it May, June, July, August, September, October, November, and December. So we used it for 8 months. The way to prove that to yourself is to say we did not use it January, February, March, or April, because we didn't go there till May. So we did not use it for 4 months. And those total to 12 months. So since we did not use it for 4, we did use it for 8. We used it for 8 months, and it was $200 a month. So we'll multiply $200 a month times 8 months, and the rent expense is going to go up by $1,600. We're going to bracket retained earnings because remember, revenues minus expenses, so the goes into retained earnings, the profit, and so the expenses are a negative sign and they're going up. So we have brackets around them, and then the prepaid rent goes also goes down, decreases, bracket signs for $1,600. And then recognize the revenue earned from transaction 8. So now we look at transaction 8, and it says on September 1, 2012, a customer paid $600 for services to be provided over the next 6 months. So if it's $600 for 6 months, it's $100 a month, and they did it on September 1. So now we have September, October, November, December. So we have 4 months, September, October, November, and December. 4 months at $100 a month. So we're going to have 4 months of rental revenue and 4 months of our obligation for unearned revenues going down because we've provided that service to them. So retained earnings goes up. It's a positive number in retained earnings for the $400 of rental income. And the unearned revenues, the rental obligation, is a bracket 400, so it goes down by 400 for the amount that's been earned. Next and last transaction, accrued salaries were $1,200 on December 31st. So salary expense on December 31st is going to go up, and salaries payable is going to go up. They're on the same side of the equal sign, so we have to make sure that they have opposite signs. So the salaries expense is in the retained earnings. It's going to have a negative sign, be bracketed, because it's making the retained earnings go down. And then salaries payable is going up because I'm obliged to pay that salary, so it's going to be a positive number in salaries payable. Now there, we've just talked through all the transactions. That should help you reason through how you will enter those transactions. Now remember, this document is in Word, so Word doesn't have a sum function to it. So you either have to enter these into Excel and add them up, or you have to add them up with your hand calculators. But all of those totals at the bottom need to be summed. And remember, the way that we double checked those in chapter 1 was we added up all the totals on the asset side and all the totals on the liabilities and owner's equity side, and made sure that those two totals equaled one another down at the bottom. And that's a very good double check before you work forward with any of these numbers. Make sure that these are in balance before you go forward. Okay, then the second part of this problem, or the next part of this problem, is to scroll down, and I'm going to be scrolling down now, and you see the Chapter 2 comprehensive problem continued. Compute the missing information in these statements. So as we look at those, we notice that some of this information is given and some of it isn't. So I left the service revenues and I totaled the expenses. And remember, profit is revenues minus expenses. So you want to get the net income and put that in the next column. And then you want to continue to scroll down and look at statement of change in owner's equity. And remember that contributed capital plus earned capital made ending capital. So the contributed capital is up there at $8,000 and the earned capital is there at $2,815. So now you add those two together to get the total stockholders' equity. Now, in the balance sheet, remember, it is the accounting equation. Assets, the total assets will equal liabilities plus owner's equity. So you want to add together all the assets and get a number, and you want them to equal the liabilities plus owner's equity at the bottom of the balance sheet. So it's good to add these numbers together and see that that the numbers that are given to you total what the rest of the balance sheet gives as its total. Now the statement of cash flows has cash from operating activities, cash from investing activities, and then cash from financing activities. In this particular case, we have no investing activities. They didn't buy anything, so there's no number there. But it does have operating activities and cash flow activities. So then you have to determine the net increase in cash and the ending balance from cash, the beginning balance from cash to get the ending balance. So I want you to put those in to your account, to your Word document cells. The proofs for those numbers I left down here so you could see how they were getting those individual amounts in the operating activities. Now that ends your comprehensive problem. I'm trying to make these simple and easy for you to follow at first so that you don't get far behind, so that you keep up to date and you can learn as you go. You can see how much information is here, and eventually I'll be weaning you off of what I do and on to you doing more. And I will be asking you to put in more information, not just get totals, but to bring data numbers forward. But right now I'm just trying to be easy about it with you and let you get comfortable with the size of these problems. I hope that you could look at these problems, see how much information is there, and realize how much time you'd be spending if I ask you to complete all of these at one time. All of this information, type it all in yourself. So at this point for Chapter 2, I'm wanting you to again input data on the transaction worksheet, sum the totals, take the totals forward to the financial statements, and then sum the financial statements. I hope this has been helpful to you. If you have any questions, you're welcome to send me an email. You're welcome to come to my office hours. And if you happen to be in the ground class, you're welcome to bring it up in class. I'd be happy to answer it for you. This will actually be ending our study of Chapter 2 and preparing us for Chapter 3. See you in Chapter 3.